the next story is looking at AT&T. AT&T has new upside potential thanks to a great agitator, Elliott Management. All right, let's scroll down. Shares of the telecom colossus surged to a 52-week high on Monday after Paul Singer's activist hedge fund, Elliott Management, revealed its own $3.2 billion worth of common stock. So a big company or a big money jumped into the stock. The firm wrote in an open letter that it intends to help the company sell off parts of its business, and that could see a $37 price stock rallying as high as $60. So this is behind the scenes as to what's going on with AT&T, that big money is pouring into AT&T to help it to sell off some of the other parts of the business that eventually will help to increase the bottom line. Let's now go back to my watch list and let's go find AT&T. Currently, the stock is undervalued with $38.30 compared to $46.46. So that's good. Next, the stock does have upside potential. Its relative value is at 1.29. This stock should outperform a AAA corporate bond by 29% over the next 1 to 3 years. The safety, though, may not be what you like, though. When earnings comes out on AT&T, it may or may not meet earnings expectations, which could affect the stock's price. But the stock is in an uptrend with the RT at 1.19 above the value of 1. The stock is currently a buy. It does have positive earnings, and they're growing their earnings on the earnings growth. They are growing their earnings by a clip of 11% a year. Let's go take a look at the graph. Let's view the stock graph. Put it on a 3-month graph. Look at that. Not bad at all. Earnings has been wicky-wacky. Remember I showed you that the relative safety was below the value of 1? Well, this is what a stock that's got a relative safety below the value of 1 will look like. It will either miss or hit their earnings, but it will be hit or miss. When you have a stock that's got a relative safety above the value of about 1.25, the chances are, just like Johnny Mathis, the chances are that the stock will meet or exceed its earnings. Over the last 3 months, the stock's price has been moving higher. The 3 and the 8 have done a great job keeping you in the stock. The stock hit a new high yesterday, and right now it's pulled back. If you're in the stock looking at the 3 and the 8 from a swing trade perspective, you are fine. If I'm not in the stock, I'm going to wait to see if the stock can take out the high before I pull the trigger on it. I do like the rising earnings as of lately. Today wouldn't be a good day to buy into AT&T, but I would like to say if the stock breaks above that level of the high, look at the movement of the stock, look at the now new movement of the earnings per share. That may not be a bad play. All right, Joff says, in my humble opinion, AT&T couldn't find its way out of a poor portfolio contest. But then again, that's as of September 9th, been outdoing Apple, Microsoft, and VVC, shows what I know. Doesn't matter. This is why we are looking at analyzing the stocks along with the story. We can get the story, but you know what VectorVest is? VectorVest is our Paul Harvey. VectorVest is giving you the rest of the story. Keep that in mind. Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.